Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel. And today we have an amazing guest in Mr. Apurva Shah from JAYS Properties. Before we dive in, I want to ask you a real quick favor. Would you mind please taking an extra 30 seconds to head over to iTunes and rate this podcast with 5 stars? This helps us get more listeners, and it means the absolute world to me. So thanks for making my day with that 5-star review of the show. All right, let's dive in. Apurva is the managing partner at JAYS Properties, LLC. His focus is on residential and commercial real estate investments, including value-add, office, multifamily, and mobile home parks. Apurva has completed over $50 million in real estate transactions and manages an 8-figure portfolio. Apurva, we are excited to welcome you to the show.
Awesome, Andrew. Thank you so much for having me.
Would you be so kind to start out by telling our listeners your story and how you got into manufactured housing communities?
Yeah, so kind of an interesting story. Again, I'm Apurva Shah. I'm the managing partner for JAYS Properties, JAYS Investments. We really started off, I guess the whole backstory behind this is I moved down to North Carolina from when I graduated college. My background is electrical engineering, was great, was in corporate for a while. And when I moved down here, I originally just wanted to, buy a house and rent it out to some roommates and basically have them pay the mortgage. Those roommates actually became my business partners for a while. And, not having capital early on, that was obviously a struggle, but we started wholesaling homes, flipping paper, doing rehabs, rental rehabs, essentially doing some fix and flips, built up a capital stock and said, hey, this is great. We probably did about, 30 homes or so. And from there, wanted to do larger opportunities, larger deals. So mobile home parks, as well as multifamily, was kind of like the next ideal step for us. I didn't stick with those partners at the time with my roommates because they wanted to continue doing the fix and flips. So I said, okay, cool, let's end here. And I started actively looking for multifamily properties. My business partner today, Jack Yen, he's incredible, really great on the data side. He's our spreadsheet master and does all of our underwriting. And for us, I actually was looking at a multifamily property for a while and was going to share it with Jack. Met him through connected investors, and said, "Hey, look, I have this opportunity. Do you want to invest with me, or what do you want to essentially pay me a wholesale fee?" And he said, "Well, I'm in the same space as you. I want to build a business around private equity and doing larger opportunities." So from there, we said, "Okay, cool. Let's look at manufactured housing and multifamily and see how we can work together on different deals." So one of our first deals was in Michigan, and I think one of your previous folks that were on this show, Hansel, brought us this deal, and we said, "Hey, let's all partner together. Let's work on this Michigan deal." I think it was like 550,000 is the purchase price, and within 18 months, we cashed out about 1.6 million. So $1 million profit in 18 months. So that's what really really got us hooked on manufactured housing. That's where we said, hey, let's make sure we start building a business, or at least a portion of our business has to be dedicated to mobile home parks. Obviously, yields are great. There's lots of opportunity. And this was probably 6 years ago. So definitely less saturated than it is today. But that was like the core of how I really got started there.
Yeah, hard to make $1 million and walk away from something, right? When
That's
was
right.
that? When did you buy that first deal in Michigan? That sounds like an awesome deal.
So it was, I think it was 2017, 2018. We purchased it. And then about 2019, 2020 is when we disposed of it. We basically sold it off.
That's fantastic. And what does the portfolio look like today for mobile home parks?
Yeah. So for our mobile home parks, we have about 500, about a little bit over 500 units of mobile home parks. And then we have about 200 or about 150 or so of multifamily, and then we have some other businesses like car washes, and or we have a car wash, and then we have a Wayback Burger, which is a little bit of a niche little little product there.
Wow. So you're doing all of this. Wow, that's really interesting. So, I mean, getting into multiple asset classes, which has performed the best?
Hands down, mobile home parks.
Really better
Yes.
than the car washes? I know I see all these car washes, these brand new fancy ones going up. I live in Orlando, and it's
Yeah.
like everywhere you go, there's a new car wash going up on the corner. So what's going on there? I mean, is that a good business? Has it been, I figured from an
Yeah, it's
operational standpoint, it'd be tough.
yeah. So that's exactly it. So right. So car washes are an incredible asset class, right? I mean, they're very fruitful, especially if that is the main focus that you have. It's very operational heavy, right? Luckily, we purchased a car wash that's essentially in our backyard. I'm based in Raleigh, North Carolina. The car wash we purchased is in Durham, and we're still learning daily on how to operate it, how to navigate it, how to build out staff accordingly to work the day to day. We purchased it about 6 months ago, so we're still working through the kinks. I'm over there, I'm still working to get those coins and working through a lot of it's cash, right? So understanding that side of it has been interesting, and being able to trust someone who can pick up the cash, pick up the different responsibilities there. But
Totally.
certainly fruitful there.
And tell me about, like, how do you get educated, like when you decide to go into a new asset class? I mean, I've gone into mobile home parks. We went into self storage, and it was a lot of work to kind of get up to speed on that. How do you kind of get up to speed?
Yeah, yeah. So the big thing, both Jack and I, we make sure we allot a specific part of our day, especially in the afternoons. We'll allot just to learning different asset classes,
Hmm.
right? So if we're saying, hey, look, we want to get into self storage, and that is the asset class we do want to get into. Currently, we don't have any, but a portion of our day is dedicated to just educating ourselves. So it could be just researching on biggerpockets.com, right? Or talking to other seasoned investors, or just googling. Oh, hey, like how do you evaluate a self storage unit? And that's a lot of how we got into the mobile home park space. Um, we didn't know much about the operations. We knew the basics just from our fix and flip days, and from there, it was understanding the numbers, understanding, okay, this is how a septic system works, this is how a well system works, and really just diving deeper and deeper into the nitty gritty of each of these different asset classes and how to evaluate them to continue to make returns for us and our investors.
Have you attended the MHU boot camp, the Frank and Dave boot camp?
I haven't. I've heard really good things about that.
Wow,
Yeah.
that's interesting. Yeah, I would say like 95% of the interviews I do, like the operators have attended the Frank and Dave boot camp. Highly recommend it. Frank's a
Yeah.
riot and super entertaining with his stories. He's has a lot of stories from being in the business for so long. But that's a great way to like get educated on like, the nitty-gritty of it. But that's interesting that you did it all like what on YouTube and just kind of, researching online yourself.
Y- Yeah, researching online. I remember I read essentially mobile home park for investing book. I wish I had. I actually don't remember what the name of the book was. It was about 4 years ago, and I was like, oh wow, there's so many different, especially on the due diligence side of it. That's such a monster on its own. I feel like the financials and putting together offering memorandum and all that good stuff. That's like the easy part. The real part is, hey, okay, well, what happens if XYZ fails, or you have a bad tenant, and especially in this space, it's
Yeah.
very very different than
Management intensive and that due
yeah.
diligence is so important. Like on a deal we're doing right now, we discover there's $266,000 of basically replumbing gas lines that are underneath homes. So like we
Wow.
didn't even,
Whoa.
when we first started buying parks, we didn't even know that you needed to check where the gas lines are. But after refinancing several deals with agency lenders, Fannie Mae and Freddie Mac, their
Yeah.
engineers, they send out engineers to the properties to check out the site map. And if there is gas lines that go underneath a home, it's a life safety hazard, and they won't underwrite your loan. They won't do the deal if you're
Wow.
going to refinance. So
Wow. 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 Wow.
so we got that checked out, found out there's like 25 homes that need this line, you know, moved out, like dug up and moved out from under these homes, and it's going to cost, like 266,000. So luckily we found that in due diligence, so we know that going in, and not get stuck with that when we're trying to refinance, with an agency lender. So that's why
Yeah,
it's
I
so
mean, the
important.
big thing is you certainly don't want to one overpay, right? I mean, I'm seeing this across the board of people are just trying to find deals and try to close deals, just especially in such a complicated, I would say, quote unquote, complicated market with today's economy, right? It's folks could be purchasing at a three cap, and sure, maybe that three cap does make sense as long as you're able to add value and continue to potentially operate at a higher cap rate. But for us, we've been super conservative on just understanding how that looks like, and I'm so glad, Andrew, that you found that up front.
Totally. What do you think
Yeah.
is the toughest hurdle to overcome in mobile home park investing, Apurva?
Yeah, so I mean, it's a great question, right? So I think the biggest thing is operations, right? Right now, we're certainly in a unique spot. We're able to, we don't have to scale up if we don't want to. We can certainly, retire and all these different things, but that's just not who we are as business owners and entrepreneurs. We want to continue to scale and continue to build a business around our obviously mobile home parks and essentially our other asset classes, but putting the right people in the right places to have a successful team that's efficient, right? That's early on. I remember I was essentially micromanaging everything, from underwriting to writing up the offers to dealing with some of the tenant related things to all kinds of stuff. And when you're under potentially 50 units, sure, you might be able to do everything, but as you continue to scale up, and if you want to get to that 1,000, 2,000, potentially 10,000 units, right, there's just no way. You're never going to be able to scale as if you're not building a business or building out the right people and putting the right people in place. So for me, the biggest thing and the toughest hurdle essentially has been working through hiring the right talent, hiring the right folks, and putting them in a spot in terms of our operation, because we do all our management in house. We have our regionals, we have our on-site property managers. Having the right folks in those places that are efficient and exactly know what, and training them on exactly how we want them to operate.
Well
So
said.
that's
Yeah, I
been a
agree.
struggle.
That is like the hardest part for sure. What does your management team look like? Like, how many employees do you have? How many offsite, corporate office people do you have versus the on-site managers, et cetera?
Yeah. So we have about 9 people on our team. A handful of those are on-site managers. Not every single community that we own has an on-site manager. The larger communities that have essentially 30 lots and higher, we'll have someone on-site just to be the eyes and ears, and then they will essentially report into our essentially regional manager, and the regional manager essentially reports into me. So
Nice.
I handle a lot more of our operations, and then Jack handles a lot of our investors, investor relations, underwriting, and broker relationships.
Gotcha. What does the perfect mobile home park look like to you? And like, if you were looking at a deal to bring into the portfolio, what would that typical park look like?
Yeah, I mean, look, our checkbox is. I wish this is our ultimate dream, right? But all lot rent only, no park owned homes. What was it? Public utilities. That's the ideal, right? But that's not the case, right? So a lot of our opportunities today we're seeing is, we're certainly open for private utilities. So well, septic tanks, that's fine. We'll underwrite it. We'll do our due diligence on those. Usually it'll be 30 lots and above. We're certainly not in that institutional space yet. But we're working to get there, right? I think that it'll probably be a 2 to 3 year plan of, hey, look, we're our minimum check size will be 2 million or whatever X amount at that point. But right now, our minimum check is essentially 500,000 and above for purchasing mobile home parks.
Gotcha. No, do you guys have any like private sewer systems that you guys manage that are not septic?
So one of our latest deals that we just took on is essentially a sewage plant in a way. It's in about 10 minutes from downtown Raleigh, and we have been learning every single day on this thing. So we purchased this thing about 3 months ago. It's 67 lots and has a gravel sewage field that has a pump house, and then there's this open area that basically gets all the water and the essentially the filtered water that goes into the field. So we're still trying to learn through that, and that's definitely been the most complicated opportunity that we've certainly had.
Gotcha. Yeah, those wastewater treatment plants, those things are expensive.
Eh,
I don't know a lot about them. We don't own any of them, but I've just
yeah.
heard that they could be complex and you got to get like an operator to run them and all that. Um,
Exactly. Luckily, early on when we found an operator, they also were licensed in wastewater treatment, and so he's been managing it. We've been super blessed on that side of it, but just handling the day to day. I mean, just today, this morning, I was there and just reviewing the field because we've had a number of we spent a number of I think it was like 75,000 or so of repairs done to that thing, replacing pumps, replacing filters, churning the gravel bed. So what we want to make sure is now that we spent all this money, and we did this due diligence up front, so luckily it's not, oh, hey, now we have to spend this money, but it's we caught it up front and we said, okay, these are the different things that need to be done, and now we just want to make sure we're maintaining. Right, the big thing is having eyes on the ground and making sure uh,
mhm,
it's it's not going backwards
sure.
to what it was before.
Totally. I will say at the MHU boot camp, the Frank and Dave boot camp, Frank Rolfe says, stay away from the wastewater treatment plants and the lagoon systems. So they do I know they do like a virtual, rendition of that boot camp. Might be worth checking out.
Yeah, yeah,
What
that's fun.
mistakes in mobile home park investing have you made that we could learn from?
I think on our earliest deals, the biggest thing has been due diligence, doing the right due diligence up front to make sure that you're not getting bit later on. Right. So, and this, a lot of it comes down to septic tanks. So many parks in North Carolina, or at least in our backyard here, they'll either have well or they'll have septic, and just being able to do the due diligence on it. For example, right, when we one of our first parks that we uh, took on, we did like the basic well system checks, saying, hey, is there any bacteria? Is there anything going on with the well? But what we didn't do is do lead and copper tests, making sure there's, essentially deeper water sample tests. And what we find out is we're positive for copper, which was very odd because we checked what the pipes were. Pipes were not copper pipes. They're all PVC across the entire entire board. So we were saying, oh, why are we testing positive for copper? And it was really, there was a lot more digging and understanding. Okay, hey, getting the experienced folks, the well operators and folks like that, to really tell us, hey, this is what's going on with your system. It's not really the well that's the issue. It's the people's homes where you're pulling the samples from. That's where you're getting the positive. So we had to do a little bit of due diligence and understand that. We didn't catch this up front, but we caught this as we're operating. Now, what we're doing is we have basically a due diligence checklist saying, hey, these are the different things, especially if you have a well, you need to check. If you have a septic tank, you need to check these X, Y, Z things. And I think the big thing is, don't cheap out up front, right? Make sure you're doing the right due diligence. Get the folks that are actually going to open up this septic tank cover and put the camera and probe down the drain and do what they need to do, right? I'm by no means a septic experienced guy or anything like that, right? So that's been biggest hurdle for us is putting together that proper due diligence checklist. And I'm sure from if I went to the MHU, the boot camp, I probably would have learned that earlier
They do
on.
give you a 30-day due diligence handbook. That is a great
Yeah,
starter point, and that's how we got started with our deals. Is we followed the due diligence handbook,
yeah,
but that it starts out with like 50 checkpoints, and off every deal we've done, we've added to our due diligence checklist, things we've learned, right? Like to
Yeah.
check the gas line locations, to check the transformers to make sure there's enough juice to serve, the park and things like that. So our due diligence checklist is like 300 plus items now, or it started at the 50. So it's just, every deal adding something on there, but you got
And
to
that's
start somewhere,
exactly, yeah, exactly, right? I mean, we certainly we kind of started from scratch, right? And good thing, maybe a bad thing. It's kind of in between. Luckily, we've been in a really good spot where we've been conservative enough up front on all of our opportunities to the point where, knock on wood and fingers crossed, toes crossed, we haven't lost any money on them, right?
That's good. That's great.
We've had,
Yeah.
yeah, spending a couple grand additional. Sure, we've accounted for that, especially early on because we were like, well, we didn't
Yeah.
really understand, and luckily it was just all our internal capital. We didn't raise money up front.
That's good. Yeah. No, I looked at a deal in Fayetteville, North Carolina. The numbers looked great. It was a well in septic. And we went and got it like the well tested, and the well tested out okay. But then we went to the EPA and checked the health department records and saw that they failed some tests that were for, I forget the chemical, but it was something bad. It was like arsenic or something that was like found in the test results.
Wow,
So
wow.
we didn't proceed forward with the deal. But it's like little things like that. That's like, you want to make sure you dot your I and you cross your T, because otherwise you could buy this thing and now you are, poisoning a large group of people, and think
Yeah.
about the liability that comes with that, right? You just bought yourself a lawsuit. So it's pretty big. Let me ask you this. What are the most important things passive investors, we're talking limited partners here, what do you think they need to look out for when investing into mobile home parks?
Yeah, no, that's a great question. And we tell our investors, hey, vet all of your GPs. Obviously, many of our investors, they invest in other opportunities as well. There's many operators out there. So understanding who your GP is, general partner is, right? What's their social media look like? Or is it them consistently going out and not worrying about your investments? And how transparent are they? Are they giving you monthly reports? And even with those monthly reports, how detailed are they? Are they actually showing you where all the pennies and dollars and all this good stuff is going, or are they just saying, oh, here's your return? The big thing for us is being very transparent. We pride ourselves as part of Jay's Properties. We say, hey, look, we want to show you guys financially everything, right? Up front, we're going to show you everything, and once you're part of the deal, we want to show you exactly where every dollar is being spent, and also show you what the general partners are making, right? The big thing really is obviously, you know, the limited partners, they're getting their preferred return, and also the equity distribution, which is great. But what happens if things go south, right? What happens if you have a large capex, or for some reason the well doesn't work, or you have to replace a septic tank? And are you being upfront with your investors saying, hey, you're not receiving your equity distribution this quarter? Or what does that conversation look like? And for us, the big thing has been being proactive about communication with our investors. We want to tell them, look, not everything's going to go as planned, right, and as forecasted. That happens. You may have something in a deal that just is a surprise, and that's unfortunate. But being conservative, being transparent, and communicating properly with your limited partners is super super important, and going that extra mile of saying, hey, look, guys, we it might be a mid-month thing, it might not be at the end of the month, but be like, hey guys, we're running into a little bit of a potential cash flow issue based on XYZ things happening in the community. And we've done that, right? We've had to have those hard conversations, but we're not just shying away and just typing an email and not responding to anyone when people have questions. So that's the big thing, is definitely vet your sponsor, vet your general partner, really really thoroughly. And it's everything's good when everyone's making money, but what happens if things do go south?
For sure. What does the future of mobile home park investing look like? And how do you see the business fitting in with like the direction the economy's going, with higher interest rates, possible recession, et cetera?
So right now, as I said, the economy is kind of an interesting spot, right? Obviously, interest rates are certainly elevated, right, compared to what they were 6 months to a year ago. And today's market is certainly different than what it was. And what we're seeing is where mobile home parks are going is it's becoming more and more attractive, especially in certain areas of the country where this is a preferred style of living or preferred place to live, right? Especially if it's a clean, nice community. I'm not talking about the class or basically, a class D or a 1-star park, but I'm talking about those 3 to 4 star parks. And what we're seeing is a lot of folks who just they can't afford a single family home, which might be 3, 4, 500,000 dollars. They're preferring to buy a mobile home and bring it to our communities or other operators or other communities that are there in the area. That's been a huge shift. Early on when I was in the single family space, I didn't know this. This is people are actively looking at mobile home parks, and this is where people want to live. I just thought, hey, they're trailers on the road and they're on the side of the street. And for us, we wanted to do something different. We wanted to build a community. We didn't want to just be another landlord. Hey, here's a check. We're collecting a check. We wanted to go and speak to our tenants. Say, hey, what are you struggling with? What we tell our regional managers is once a quarter, you need to go down there, talk with your tenants. There could be, a single mother who's struggling to pay rent, but she's just paying rent because she's scared of getting evicted. We want to work with those individuals and help their life get better, not just, oh, hey, we're collecting rent and great, everyone's happy. No, we want to make it a more of a community feel. And so because of that, we're seeing a lot more tenants being driven in. We're at about I would say 99% occupancy across our entire portfolio,
Do you do
and
infill projects?
we do, yeah. So we'll
How many,
work with.
what's like your biggest infill project? Like how many homes have you brought into a community?
Yeah. So we've brought in it's been about 12 into a community,
Nice.
and those yeah, and it's smaller, but those will go within two
Mhm.
months.
And
And
where's your portfolio located primarily? Is it all in like the Midwest or in North Carolina?
it's yeah, between North Carolina and Virginia is where we're purchasing.
Gotcha.
Uh,
Gotcha. And how do you finance these things, Apurva? Like what does that look like? Do you have like a strategy there or anything like that?
yeah, so we've built a number of relationships with local lenders for our smaller opportunities. And the secondary side of it is if it's a larger opportunity or if it's a essentially Fannie Freddie play, we'll certainly use agency debt. But most of our opportunities, especially up front when we're in the acquisition stage, it's going to be with a local lender, local bank, or someone
And you're
that
just
we
getting
have.
like 5-year balloons on those or
Exactly. Yeah, it's usually
okay.
5-year balloons. For us, we're not really a big fan of variable debt, and we're also not a big fan of doing just bridge debt or anything like that.
Have you ever done
Especially right,
those?
we haven't done those. We'll do an interest only period, but those are especially on those heavier value add properties, we'll want some interest only. But we certainly haven't done those to date, and
Nice.
more than likely we're probably going to shy away from those.
Okay. What's the biggest threat to mobile home park investing?
I would say the city councils, it's very dependent on the location of where you're purchasing mobile home parks. For example, right, Raleigh, right? They're not looking for you to build out more mobile home parks or add additional lots to your land or anything like that. You know, we're seeing a lot of developers come in saying, "Hey, let's just tear down this mobile home park, put up a brand new Class A apartment complex." Right, and that's been certainly it's been a odd spot because we're like, well, we want to continue the affordable housing thing. Affordable housing is super important to us. Most of our portfolio is going to be, that those class C, class B minus properties. We're seeing some concerns there. And as the market continues to be saturated, we want to just be cognizant of working with the local folks, and the planners, and saying, hey, look, we have these mobile home parks. We want to maintain those as mobile home parks. We're not just trying to sell it to the developer and cashing out on that side of it.
Yeah, that's huge. Yeah, we ran into that issue recently where we ran into a building inspector and like he was like the zoning guy, but he was mainly the building like department head. And he just hated mobile home parks. And he was like, I'm gonna make your life miserable. I'm gonna,
Oof.
you're gonna need a permit for everything. And there was a nice double wide that we bought from a tenant. And he's like, oh well, everything from like the outlets to the smoke detectors needing to be hardwired instead of battery powered. He went through and was like, hey, you need to do all of this. You need to rip all this drywall down and do all of this work. And eventually he's like, we did all this work. And then he was like, oh, you need to demo the home. It's beyond repair now. You're going to need to demo the home. After we like did all this stuff, pulled the drywall down, and like then
Wow.
he had to come for an inspection. And so we went above him. We went and sat down with the mayor and we said, hey, dude, like, do you guys have a problem like discriminating against affordable housing? And it was amazing how fast that building inspector's attitude changed when him and the mayor got together after that meeting. Because it's just some people, they have this stigma and they just don't understand. Like, we're trying to do the right thing here. We're trying to provide affordable housing to these markets that
Yeah.
desperately need it. People, single family housing developers are not building affordable housing. It doesn't pencil out from a return
No.
standpoint. So we need to be able to fill all of our lots and we need to fill these homes as long as they are, livable. We're not trying to, be slumlords here and fill trashy homes that are hazardous. No, these are workable, living units. And, sometimes you got to go above people to get in front of the right people to get something done. So
No, I
it's
definitely agree,
crazy.
and that's the big thing, right? I mean, we talk about stigma about mobile home park investing, mobile home parks. When I first told my friends, "Oh, hey, like we're about to invest in some mobile home parks," they're like, "What do you mean? Why would you want to do this, right?" And from luckily, since they're my friend, we're working to educate people, right? We want to tell them, look, this isn't Joe Schmo down the street who's not gonna fix things and not provide
Yeah.
alarm or smoke detectors and things like that in their units. This isn't just a piece of junk or a metal box, right? This is a really nice home. You might not even like some of these homes that we have in our communities. You might not even be able to tell between it's a single family house or a mobile manufactured house, right? So, and the insides are spectacular. And the great thing is having the folks that um, having the tenants who really love the community and having them treat it really well. Like I remember when we were driving through one of our communities, we had a tenant picking up trash in their neighbor's yard. And that's how you know, like, okay, hey, these people really want to live here. They want to take care of it. They want this to be their home. They want it so their kids can play around in the playground and all these different things, run around and have a safe place to live. And while, yeah, sure, they might not be able to afford that $500,000 home that's being built down the street, we want to make sure we
Not many can.
retain that.
Yeah.
Yeah,
It's
agreed,
crazy.
agreed. Yeah,
Apurva,
and
it's been awesome talking with you, dude. How can listeners get a hold of you if they'd like to do so?
yeah, so definitely take a look at our website. It's www.jaysinvestments.com. Feel free to email me if there's anything that we can partner on, we can work with. I'd love to help listeners or limited partners, anything we can do. My email address is apurva.liberty.solutions@gmail.com. And I look forward to the responses.
Awesome. What's one last bit of information or important advice that you would give interested passive mobile home park investors that like haven't pulled the trigger yet?
Sure. My biggest question would be, well, what's stopping you? Is it the risk? Is it the market? I think real estate is certainly cyclic, right? There's a cycle, and while it's going up and down, real estate's been consistently one of the true, I guess, asset classes that continue to make money, right? So, whether it be stocks or real estate or gold or any of this stuff, right? Especially when the market's down, real estate is continuing to outperform other asset classes or other investments. So, I mean, I think the big thing is definitely do your homework, do your due diligence on the partners or the sponsors that you're going to be working with, and continue to learn, right? Continue to learn how can you own a mobile home park or apartment complex or whatever it is that you want to invest in.
Awesome, Apurva. Thank you so much for coming on the show today.
Andrew, thank you so much for having me.
That's it for today, folks. Thanks for tuning in.
Would you like to see mobile home park value add projects in progress? If so, follow us on Instagram at Passive MHP Investing for photos and awesome videos from our recent mobile home park acquisitions. Once again, that's at Passive MHP Investing on Instagram. See you there.